There's a single vault carton sitting at the heart of Hyperliquid holding almost $200 million, and anyone can put money into it. It's called HLP, and it's how Hyperliquid stays liquid. A community-owned market maker that takes the other side of trades. In this video, I'll explain exactly how HLP works, how it makes and loses money, and I'll show you the real vault live with its actual positions on screen. This is part 2 of the Hyperliquid series. HLP stands for Hyperliquidity Provider. Think of it as a giant shared trading account owned by the community. Its job is to provide liquidity, to always be there to fill the other side of trades on Hyperliquid so the exchange stays deep and smooth. And here's the part that makes it special. It's not run by some private firm. Anyone can deposit USDC into HLP and own a proportional slice of it, which means you share in whatever it earns and whatever it loses. Let's see how it earns. HLP makes money 3 ways. 1. Market making. It constantly posts buy and sell orders and earns the tiny spread between them thousands of times a day. 2. Liquidations. When a trader gets over-leveraged and blown out, HLP is the backstop that takes over that position, often at a profit. And 3. Fees. It earns a share of the platform's trading fees. This isn't my interpretation. It's literally how the vault describes itself, as you will see in a second on the real page. Here is the key mental model. Every trade needs someone on the other side, and very often that someone is HLP. So when the crowd of traders is collectively winning, HLP is on the losing end, and when the crowd is collectively losing, which over time is the more common outcome, HLP wins. That's why depositing into HLP is basically a bet that the house, the market maker, comes out ahead of the average trader over time. Now let's look at the real thing. This is the actual HLP vault page on Hyperliquid, completely public. You can open it right now. Up top, the total value locked, almost $187 million sitting in this one vault. Read its own description. It provides liquidity through market-making strategies, performs liquidations, and accrues platform fees, exactly the 3 income streams we just covered. And on the right is its profit and loss over the last 30 days. Notice it's not a straight line up, it climbs then gives a big chunk back. That shape matters, and we'll come back to it when we talk risk. And this is what really drives it home. These are HLP's live positions right now, not 1 or 2, over 170 of them across every market, move, DDEX, people, eigen, pump, all at leverage, some up, some down. This is the vault actively market making across the entire exchange this very second. When you deposit into HLP, this messy leveraged real-time book of trades is what your money is backing. It's powerful and it's clearly not a savings account. So how would you actually use it? You deposit USDC into the vault and receive a share proportional to what you put in. From then on, your balance rises and falls with the vault's profit and loss in real time. There's a short lockup period after you deposit before you can withdraw, so it's not instant in and out. And you don't manage anything. You're a passive liquidity provider, letting HLP's strategists do the trading, which brings us to the honest part, the risk. HLP has earned solid returns over time, but it is not free money. It holds real leverage positions, so it can and does draw down hard. That dip you saw in the chart is real money the vault lost during a rough stretch. And in rare tail events, it gets worse. In early 2025, a thinly traded token called Jelly was deliberately squeezed in a way that threatened HLP with a massive loss, and Hyperliquid had to step in. The lesson: depositing into HLP is taking on active trading risk in exchange for a share of the profits. Treat it like that, not like a savings account, not financial advice. Let's lock it in. HLP is the community-owned vault that provides the liquidity for the entire Hyperliquid exchange. It earns from the market-making spread, from liquidations, and from fees, essentially by taking the other side of the crowd's trades. You can deposit USDC to own a share and ride its profit and loss, both directions. It's real, it's leveraged, it's roughly $187 million, and unlike almost anything in traditional personal finance, every position it holds is completely public. If breaking down how these protocols really work, with the real numbers on screen instead of hype, is what you're here for, that's the whole channel. These take real work to put together, so if it helped, the wallet's on screen and there's a Ko-fi link below. Every bit funds the next one. Thank you. Next in the series, we'll break down the hype token itself, staking supply, and that legendary airdrop, and I'll show you how to build a live on-chain tracker of the whales yourself for free. If you want crypto explained in plain English but always backed by the real data, subscribe. And drop a comment. Now that you know how it works, would you actually deposit into HLP? I'll see you in the next one.